Guys, I had a subscriber who recently wrote and asked me a very good question. They said basically, help. I'm 40 years old and I don't know exactly what I should be investing my money in. They said, I don't know where to put my money. Hey, that was a great question. And so I'm doing this video to answer that question, to give you all the different options where you could be investing your money. Look, investing is for anybody of any age. But sometimes, guys, as we get older, we tend to think that some investments are not for us or our time has passed us up, right? And we think our options are limited just because of our age. Well, the truth is, it's not. And I'm going to talk about all the different types of investments that are open to you, no matter what your age is, in this video. Now, we've got a lot to cover in this short video, so let's get started and let's jump right into it. Now, guys, the first investment that's available is just investing in stocks, which is owning a piece of an individual company. So if you have a slightly higher risk tolerance level, individual stocks can offer you significant growth potential. There's dividend stocks, common stocks, preferred stocks, value stocks, growth stocks. All of these are available to you to invest in if you're willing to learn. Now, while stocks are one of the most volatile asset classes, they also have among some of the best returns over time of all the types of investments that we're going to talk about. And so as you get older, some people will tell you to divert some of your investments in stocks into a more safe asset class, like bonds, which we'll talk about later. But as you get older, you still may want a sizable allocation of your investments in stocks. You can also trade stocks. You can trade options and do a whole host of other things with stocks, right? Call options, puts, and more. It's all available to you. Over the age of 40, over the age of 50, over the age of 60. Now, the second place you should consider investing your money over the age of 40 is mutual funds. Index funds, or ETFs. Index funds are just a type of mutual fund, and ETFs are similar to index funds. So mutual funds, index funds, and ETFs are just a bucket of stocks all in one place called a mutual fund or called an index fund or ETF. Now, traditional mutual funds are typically what's considered actively managed, which means the fees for them are a little bit higher than, say, an index fund or an ETF. Index funds and ETFs are typically known as passively managed, which means their fees and what it costs to manage the fund and administer the fund is a little bit lower. Typically. Now, ETFs are exchange-traded funds. And as I said, they're very similar to index funds. But ETFs are a bucket of stocks that you could actually trade on a stock exchange, just like you trade individual stocks. And ETFs usually have a lower barrier to entry than some index funds. But again, you have growth index funds and growth ETFs. You have value index funds and value ETFs. And you have sector-specific index funds and sector-specific ETFs that target specific sectors like technology, healthcare, energy, or just index funds and ETFs that can be tailored to you based on market conditions, based on what you like and want and desire in a bucket of stocks. Now, the third place to consider investing your money over the age of 40 is bonds. Now, bonds are usually considered a safer place for your money, but that safety comes with the much greater potential for lower returns on your investment. Now, a bond is just a loan from the buyer of the bond holder, which would be me or you if we buy bonds, to the issuer of the bonds. So again, a bond is a loan from us to whoever we're buying the bond from. The whole point of a bond for governments, for corporations, for cities is to raise capital, to raise money. So typically you'll see a bond issued because the entity who's issuing the bond is trying to raise money for capital. So you have government bonds. You've probably heard of treasury bonds, treasury bills, treasury notes called T-notes, right? Those are all government bonds. And then you have corporate bonds where large companies are raising capital, raising money so they can maybe build something big. Or you may have municipal bonds called munis, right? Where you have a city who's looking to do something big, build a school, build a hospital, right? They issue bonds. We buy the bonds, and the bond is like a loan from us who gave cash to the city or the municipality who wants to build whatever they want to build. Bonds are considered more safe, less risky than, say, the stock market. But again, they also come with a lower return on your investment. Now, the bond market is huge. It's much, much bigger than the stock market. And it's also much more complicated than the stock market as well. Now, the fourth investment that's available to you over the age of 40 is simply real estate. There's residential real estate, there's commercial real estate, there's real estate investment trust, which we know as REITs, which is a company who owns, operates, and finances income producing real estate. And they allow investors to just invest shares in their real estate portfolio. And hey, it's altogether possible after the age of 40 that you could become a real estate investor. And there's also your goals. Do you want to wholesale properties? Do you want to buy, fix, and flip properties, or do you want to buy and hold rental properties? Do you want to buy land? There's all types of options that are available to you in real estate. You just have to do your homework and decide if investing in real estate is right for you. Like all of these type of investments, there's a learning curve. Guys, if you're getting anything out of this video, do me a favor and smash that like button below. Also, please share this video with your friends, your family, and your network of people. And if you're not a subscriber to this channel, please consider subscribing to my channel. Now, let's get back to the video. The fifth place you should consider investing your money is in 401k plans, 403b plans, 457s, thrift savings plans, or what's called a TSP if you work for the American federal government. There's different types of retirement plans offered by employers for their employees. There's also individual retirement accounts that you could get for yourself at a brokerage, right? Traditional IRAs offer tax-deferred growth on your money. So you put the money in and you don't pay taxes until you take the money out, right? So it grew, your money grew, tax deferred, meaning you pay it later. Or there's Roth IRAs, where you invest the money with after-tax dollars that you've already paid taxes on, and then when you go to take the money out, there's no taxes that's due, right? That's a Roth IRA. So those are available to you too. Now, number 6 is annuities. An annuity is simply a financial contract between you and an insurance company. You put in a lump sum or you add money to it on a regular basis, and in return, the insurance company makes regular payments back to you at some point in the future. Now, annuities are typically used as a retirement strategy to provide steady income once a person retires. There's fixed annuities that provide a guaranteed payout, and there's variable annuities where your payments are going to be based on the performance of whatever underlying investment that your money is invested in. Now, the 7th place that you should consider investing your money over the age of 40 is alternative investments. And there's a bunch of different alternative investments where you can be placing your money. There's commodities. That means investing in physical goods. That could be precious metals, right? Gold, silver, platinum, or oil. These commodities sort of hedge against inflation. And then, of course, there's other commodities like energy, natural gas, and agricultural products like corn, wheat, soybeans. Look, all of these are available for you to invest in. Now, another alternative type of investment is private equity and hedge funds, or you can become a venture capitalist. Now, these are a little more risky, right? But these are all different types of investments that are used to earn returns for investors. These are the high risk, high reward investments that are usually available to accredited investors. Now, when I say an accredited investor, that's a person or an entity who meets certain criteria to invest in certain opportunities that may not be available to regular investors, right? Accredited investors are usually considered to be financially savvy, financially well off, so they usually have a lot of money so that they can handle the loss, right? So there's certain types of these high risk, high reward investments that aren't available to everybody. But if you find yourself in a position to be able to become an accredited investor, go for it. These things are out there for you. Just make sure you do your research on these more volatile type of investments that are high risk, high reward. Because private equity and hedge fund investors, that's not something that I would normally recommend to most people, but it's available. And then you have some other alternative investments like cryptocurrencies, like Bitcoin, Ethereum, right? And then you have some of the altcoins that are out there as well. Those are all different types of alternative investments that are available to you as well. Now, full disclaimer here, guys. While all of these things are out there and available to you, you just have to know the risk and don't be out there gambling with money you can't afford to lose. Do your research and make sure you learn thoroughly before you jump into any of these investments. But hey, you need to know what's out there. So I'm exposing you to all of it. Now, number 8 is what's called cash or cash equivalents. That would be your savings savings accounts, your high yield savings accounts, your money market accounts, or CDs. These are all the ultra safe investments and things that you want to try to beat out inflation, because otherwise, if you put your money in a savings account down the street from your house, it's only going to return 0.5% or less, right? And that's way less than what inflation is. So with some of these cash and cash equivalents type of investments or places to put your money, sometimes you could be losing money because it's such low risk. Now, the ninth place you can put your money is in the collectibles, the art, the antiques, the wine, the collectible cars, the firearms, the stamps, the coins, the rare books, right? These things are available to you as well. Now, finally, number 10 is available, and it may be the most necessary place to invest your money, and that is to invest in you. Yourself. Invest in your learning. Invest in your growth. Invest in your self-development, right? Invest in new information. Never neglect investing in you throughout this whole process. Take the classes, go to the conferences, watch the YouTube University, get you a nice list of podcasts that you listen to for your learning, listen to the audiobooks, right? Join the meetups, meet the new people, get the new knowledge, all of it. Through it all. Through every investment that I've talked about in this video, investing in yourself is the absolute most important investment that you'll ever make. But all of these things in this video are available to you today, even over the age of 40. You don't have to be hindered or boxed into a corner where you can't enjoy and learn all these different types of investments. You just have to make sure you consider your risk tolerance level, your time horizon for when you actually want to have access to the money that you're investing to use to live on a regular basis. Diversify your investments, write down your financial goals and your action steps to reach those goals, and make sure you're willing to make any adjustments in your financial portfolio along the way. And you may even consider consulting with somebody, having a mentor or a coach or someone who can provide personalized guidance for you that's tailored to your specific situation and your specific goals. Remember, invest in what you know, do your research and learn so you can be investing in things with confidence and not just pure speculation, right? Don't forget to invest what you can afford to lose, be consistent, and diversify your investments. Don't have all your eggs in one basket. And don't think you're too old to learn something new, right? You're not. Don't invest based on fear or based on your emotions. And most of all, don't panic. There's no restrictions based on you being 30, 40, 50, 60 years old. Doesn't matter. Your investments and investing strategy should be based on your own individual circumstances, your own risk tolerance level, your personal financial goals, and your current financial situation. Look, you got this. Let me know in the comments below, what are you invested in right now? And drop a comment about what you've always wanted to invest in but never did. And if you got value out of this video, guys, do me a favor and please share this video with your family, your friends, or your network of good people. Hey, the best person who's going to take care of the old you is the young you. Guys, take good care of yourself and take care of other people. Until the next video, peace.